Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Joe Raia. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Today I spoke with Managing Director, Global Commodity Futures, RJ O'Brien and Associates, Joe Raia. Joe shares with us his experience sailing on an oil tanker and how starting his career on the physical side of the oil markets helped him when he moved over to the trading side. Joe shares with us how he develops a macro view in oil and gives us his thoughts on the latest price action in crude oil and natural gas. Last but not least, Joe tells us why oil traders should be paying close attention to what happens at IMO 2020. So without further ado, let me take you right to the interview with Joe. Joe, you started sailing on oil tankers in 1980, and after several years working on oil tankers, you moved over to the more fun side, the trading side. But before we get into what you've done over the past many years on the trading side, talk to us a little bit about what it was like to sail on these oil tankers.
Well, it makes for good conversation at cocktail parties and sea stories, but generally it is an interesting and I think a very relevant part of anyone's career that's involved in energy to at least have some background in the physical side of the marketplace. And having sailed for 9 years, up to captain and master on the ship, I saw the oil industry from the wellhead right through the transportation and logistics part of it, right through the refinery part of the marketplace, and it really does give you a different perspective as you move forward in your career to understand what drives markets, what type of fundamentals move pricing and logistics, and ultimately anything in the energy markets is always tied to a physical barrel or MMBTU, right? So it's not just derivatives and things that have no relevance. It has a very physical aspect in the marketplace, and so that's been I think a very valuable part of my career moving forward. It's helped me have access to other opportunities in both moving to the NYMEX and the CME during my years after going to sea. Some bit of trading in residual fuel oil, and then ultimately to Goldman Sachs for 7 years before I came over to RJ O'Brien last year. So yeah, it is a kind of an interesting road, and I think it does ultimately help build your background and your foundation of understanding markets.
Yeah, I know many traders or people that work in the industry that come from the farming side that end up working, on the trading side. And you really don't meet too many people, at least I haven't, too many people that actually started on the physical oil side and then long career like you have working on the trading side. So I think that's pretty cool. Now, talk to us a little bit about your current role at RJO and what you guys just achieved. I mean, number one in oil options and structured products in Europe.
I joined RJ O'Brien from Goldman Sachs at the end of last May. At Goldman Sachs, I was looking after the commercial and end users in the futures clearing side of the business at Goldman. And as RJ O'Brien was looking to grow both the clearing and execution part of their energy business, it was for me a really good opportunity to move over to a really, I think, the class leader in the futures business, and particularly in the commodity futures business. and with a great reputation. I had, again, the ability when I was building Clearport during my early years at the NYMEX to interact with all the FCMs in the business, including R.J. O'Brien, and I always knew that they were really the leader in the business from a commodity perspective in futures clearing. And so, yeah, it's the first. So it was a new category for the energy risk. Energy risk is part of risk.net, so it's a very widely read and looked at risk. I use it all the time, and I know risk managers around the globe at not only just energy firms but across financial firms and certainly even farming firms use it from an informational perspective. Their subset of that business is their energy risk rankings, and they've been around for years and years. I know during my NYMEX years, we were pretty consistently ranked high up in FCM categories with energy risk. And then they also have broker rankings and product rankings across the globe. So it's not just a very, very small subset of the industry. It does have a global aspect to it. And their 2019 rankings just came out a couple of weeks ago, and we were ranked number one in the oil brokerage for options in Europe, which again was an astounding for us. Very, very, we're really, really appreciative of that ranking. And that was a ranking that was voted on by over 1,000 people in the business that both comprised of our peers in the brokerage business and also customers in the business too. So we know that it wasn't just a small piece of the business. Then we also came in number 6 overall for brokerage, oil brokerage. So again, globally, and that's again a really, I think, a great achievement for our team. Especially as we're growing our team, not only in Europe but also here in the States and also in Asia. So it's again going back to my earlier point, the global, the oil business is global in nature, and it's important to have cross-selling between the individual business units, which is easy to say, but a lot of times in the brokerage business, it's very, very hard to do. And I think that was one of the things that attracted me to come over to R.J. O'Brien was the desire to make it a very much more global business, and also enhance the business by cross-selling between the different business units. And I think again this ranking for us was just a great achievement, and I think obviously something that I think a lot of firms look up to because it is an important thing to put us on the map basically in the business.
Let's talk about how you create a macro view, because every time I see you, I'm always picking your brain about what's going on in the oil and gas markets. But let's talk about your process first. I know that you started on the physical side like we already discussed, so you understand that side very well. Give us a little insight as to what you look at and what you're reading, some of the stats possibly, to where you start building your macro view in the oil market, and then we'll get into natural gas.
Yeah, so in the oil markets, Anthony, when you look at what builds anyone's views, you have to start from the source, so to speak, and the source in the oil markets is crude oil. Right, that's really the base of the tree, so to speak. And so oil markets, obviously there's, I've lost track of the amount now. I used to know the exact number, but there's probably over 100 different types of crude oil, right? The physical crude oil that are coming out of different production areas globally. However, when you look at pricing, right, the pricing of all those barrels coming out of the ground are based on generally 2 benchmarks, right? And there's always been the battle, and believe me, over my years at the NYMEX, I battled daily with ICE over which benchmark was the best, quote unquote, the best benchmark. And really, it was kind of actually looking back at it, it was quite comical, but it really was, putting your stake in the ground and saying, hey, WTI is a global benchmark versus Brent, which ICE obviously said back in the day, we're the global benchmark because we're more international. And I think the answer is that they're both important for the business and both important for the marketplace. And it really depends on where your oil is basically going from the wellhead to the refining area. Obviously, if you're in the U.S. and you're importing crude from Nigeria or the North Sea, you might have more of a pricing component to Brent, right? And Brent pricing versus WTI pricing obviously has its, components as far as how much above or below each other they are, the spread, the Brent WTI spread. But if you're in Oklahoma and you have a refinery in, say, Nevada or Houston, you're generally going to price your crude barrels on WTI up in Cushing, Oklahoma. So it really does depend on the regionality of it. For years, not to kind of get too in the weeds here, for years though, the argument in the marketplace by both ICE and NYMEX was, ICE was saying that, well, WTI is landlocked, it can't, be exported, it has no component in the global marketplace. Well, maybe that was true back then, but certainly from a production perspective, WTI is a very relevant pricing component. Again, same thing for if you're taking barrels over in Singapore, right? From even though Brent doesn't go to Singapore generally, you may price your barrels off of a differential to Brent because it's closer in regionality to the Singapore marketplace. Again, it just depends on really what you're refining, where your barrels are coming from, and what's the most relevant pricing component. When I look at my views in the marketplace, I say, okay, we look at production, look at exports, look at where the barrels are going, what's coming out of the refinery complex, and that kind of gives you a good idea of where and what's demand and the global demand in the marketplace. You look at the EIA as a good source of, okay, is global demand growing or slowing, or those are the things that from a macro perspective drive what will be the pricing components in my mind, and then certainly the market's view globally. So those are kind of like the things that I start to look at. And then you can drill down into, okay, if I'm producing a very large amount of diesel or distillate or jet fuel out of a particular refinery, what am I doing with that? Am I selling it in the local markets? Am I exporting it? And so where do I get my best refining spread basically on those barrels? Right now, with WTI around $57, $60, if I take in Canadian barrels into my refinery, if my refinery can handle that, and I can then turn around and sell diesel or jet fuel on a Brent-related barrel, I can make a very much more profitable refining spread on that barrel. So the reason being is that WTI is at 60, Canadian crude oil may sell at a discount of anywhere from $10 to $20, right, to WTI. So anywhere between $50 to $60, or excuse me, $40 to $50 a barrel. So a big discount to WTI. However, I can sell that barrel at around $70 to Brent, right? So Brent is trading around $70 a barrel. If I produce diesel or distillate out of that refinery and I can sell it and export it based on Brent barrels, I have a huge refining opportunity or spread capture opportunity for that refinery. So that's what I look at. I look at what's going out of the country, what's coming into it, where are products going? Is there something in the marketplace like a particular new regulation that's going to change the demand for diesel or distillate? Those are things that I look at in the global oil markets.
What are your thoughts right now? I know you're not trading crude oil, but what are your thoughts on the current price action of it?
It's interesting that pricing levels for both TI and Brent have been pretty range bound, I would say, for the better part of probably a good year and a half. Again, a lot of it is demand and supply driven. The U.S. has become the swing producer in crude oil with the amount of oil that we're producing out of the Permian Basin, all as a result of our production. I would say superiority in fracking and the ability to bring out many more barrels in the production area in the U.S. Certainly Permian and some of the other frac producing areas have pushed our production to an all-time high of over 12 million barrels a day. And so we have become the swing producer, right? Whereas in the past you've heard that Saudi Arabia was the swing producer, maybe the North Sea was. Now the U.S. certainly has become the swing producer, in particular particular, as a result of us now again exporting probably 2 to 3 million barrels a day of crude oil in the marketplace. So maybe that's not a lot relative to global consumption daily, which is roughly around 80 to 90 million barrels of crude a day. So small percentage, but the marketplace knows that we can put those barrels on the marketplace pretty rapidly and really have an impact on pricing. And what it's done is it's kept pricing in a very range bound area. So I think that's really what the impact is. We've seen in the marketplace because of the amount of production that we are pushing out every day now of crude oil. Now certainly the Saudis and OPEC have talked about curtailing production. That's something that right now they're still holding on to that view. And I think with the with their desired impact is to take off some of the overhang and supply in the marketplace, even though the U.S. can increase production or can push a lot of barrels into the marketplace. OPEC feels that they want to take off any of that extra supply that's in there from their side. And so for right now, it's having, I would say it's having the desired impact that they want. The OPEC is looking at probably more of a $70+ barrel ideal number for them versus when you look at what's the cost to a U.S. producer of producing that incremental barrel, it's probably in the $40 to $50 range. So there is still I would say a component of profitability to both producers in the U.S. and certainly globally too.
Correct me if I'm wrong, but it sounds to me like you agree with the current price action in crude because the price action is reflecting the fundamentals.
Correct.
Yeah.
It is, fundamentals are important in the marketplace, right? So I think the interesting thing that doesn't get enough scrutiny or coverage in the marketplace when people talk about oil pricing is the value of the dollar, right? The interest rates, increasing in interest rates or decreasing in interest rates obviously has an impact on dollar valuation, and that directly has an impact on the pricing of crude oil. If you see a devaluation in the U.S. dollar, you're going to see an increase in oil pricing. It's certainly inversely correlated. The historical numbers prove that out. In fact, I had an economist from the CME on recently where we did a little bit of a discussion about dollar valuation versus oil pricing, and the charts show it. If you look at the historical charts and pricing on dollar valuation, it's inversely correlated to the price of crude oil. So something to really focus on. Certainly demand has a big impact on that too, and I think combined they really do, form the foundation of what drives the fundamentals in the oil markets.
What about natural gas? How are the fundamentals lining up to what you're seeing in the price action in natural gas?
Yeah, so certainly right now, from a global perspective, the marketplace is looking to find pricing transparency, pricing vehicles for hedging natural gas. The U.S. Henry Hub price has been in the $2.75 to $3 range consistently for quite a long time. However, from an LNG export perspective, it's not really a viable pricing component for LNG. There have been recently attempts at creating alternative pricing vehicles. So the JKM contract out in Asia is certainly being and has been active in growth since it only launched probably about a year ago. That contract has become active from a hedging perspective and seeing nice growth in both volume and open interest for MMBTUs that go out, or molecules that go out to Asia. And again, with the exports from the U.S. increasing, I think that you'll see an increase in activity in that contract. On the other side of the globe, in Europe, a lot of the MMBTUs out of the U.S. are not only ending up in Asia, but they're ending up in Europe. And so from a pricing component, if you look at the ICE TTF contract that's the transfer facility contract that in the Netherlands, that contract is also, from a volume and open interest perspective, has grown fairly rapidly. And so you're seeing alternatives to a singular benchmark structure, much like WTI and Brent, from where it was previously. And really previously there really hadn't been a lot of use in Henry Hub by non-U.S. participants, right? So if you were exposed to natural gas imports out in Asia, it was the really only component that was around was called the JCC. It was the Japanese crude cocktail, and so not a lot of relevance to natural gas, but it was really the only thing that was out there. And so I think you're seeing a move from the JCC as a hedging vehicle into things like JKM in Asia and maybe even the TTF contract or even the NBP, the National Balancing Point contract over in Europe.
Something you told me to keep an eye on that's going to be coming out in March of 2020 is the IMO. Well, why should we be keeping an eye on that?
Yeah, as specific as IMO 2020 is, Anthony, it has relevance across the refined market component globally. All right, IMO 2020, real briefly, is a regulatory change in the shipping industry, which is very specific. However, it affects global shipping, and it also affects the type of fuel that ships use. They're moving from a very high sulfur, both residual fuel and diesel product to an ultra low sulfur diesel product that's very limited in availability right now. And so that's going to have an impact on demand in the distillate or diesel markets globally, particularly for ULSD, right? ULSD is, again, not very widely produced. And so the alternative to that is to retrofit ships with scrubbers. And these scrubbers are not very widely available off the shelf, and there is a time component of retrofitting ships to put the scrubbers on. So right now you're seeing, if you look at the curve, the diesel curve, that maybe the heating oil curve on NYMEX or the gas oil curve on ICE, you'll see a bit of contango in the marketplace now as participants in the marketplace see, both from a consumption perspective and a production perspective, the opportunity for price increasing in those markets, right? So most firms feel that the only alternative to having a limited supply of scrubbers is to change their consumption on their ships to ultra low sulfur diesel. That diesel barrel is much higher in value, and so again you're seeing some hedging out the curve, further out the curve than normal because of that. So it's going to have an implication on jet fuel pricing, on diesel pricing, on heating oil pricing globally because of the ARB or the ability to ship barrels, say from the East Coast of the U.S. If you're a refiner and you see there's an ARB to trade that over to say Singapore, you'll see that ARB potentially opening up to move those barrels quite a long distance to take advantage of that pricing component.
Joe, great insight on these macro trends and things to be watching in oil and natural gas. But we're not done yet. I have some rapid fire questions next if you're ready for those.
I hope so. I hope I can answer them, maybe not in rapid fire way, but I'll give you hopefully relevant answers to it, Anthony.
No pressure here. Big prizes though if you get them right. So just a forewarning. Okay. All right, everybody. Our rapid fire segment is sponsored by Trading Technologies. Access the global markets from virtually anywhere with the TT. They are the world's fastest commercially available futures trading platform. And now you can trade cryptocurrency spot and derivative markets side by side. For more information, please visit tradingtechnologies.com. Joe, first question for you. What trader has influenced your life the most and why?
That's a really good question. For many years, I always looked at Boone Pickens, particularly coming from the oil side of the business, as just his acumen in the marketplace, his respect in the marketplace was just second to none. And I had the chance of meeting him actually down in his office in Houston back in the mid-2000s. Jim Newsom, who was the president of the NYMEX at the time, set up a meeting for myself down there. I met him. Jim and I went down and met Boone back then. I had lunch with him in his boardroom with a couple of his senior folks at the fund that he was running. And to sit down with him from an oil perspective, if you're a fan of baseball, obviously Babe Ruth was. Well, you'd probably want to meet him. Well, for me, being in the energy business for so long, to meet Boone Pickens was really like meeting the Babe Ruth of the oil industry. So I had a chance of meeting him again down the road a few years later, and actually had him come speak at the CME, the global conference that they had in Naples, Florida, back, I guess it was the first or second year after we merged with the CME. I invited Boone to speak there, and he was just as engaging and enthralling as ever to have him there. So definitely a big influence on my professional career and even my personal career in the business.
What was one of the hardest things for you to overcome in trading?
So, I traded early on in my career, but I think even looking at my entire career in the business, in the oil business, and or the energy business better, I think convincing firms about how different you are from others, right? When you look at FCMs or clearing firms in the business, when you look at trading firms or broker firms, with very few exceptions, most of them are very, very similar. So to find something that would make you a differentiation from others in the business was hard, and I think that really is the thing that I found the hardest to overcome. I think when I competed with ICE all those years when I was at the NYMEX, how were we different than ICE, or how were we different than our competitors in the business? And I think that really is the biggest thing for any whether you're a trader or a marketing person or a salesperson to overcome.
How has your trading process evolved over the years?
That's a good question. So, starting from my OTC business or OTC exposure in oil and natural gas, and then moving over to the NYMEX in the latter part of 2001 and the early parts of 2002 to build OTC clearing and then eventually Clearport, that really was for me. And then seeing how that impacted the marketplace and the floor and the trading floors and the pits in New York. And then moving from that into technology, right? So after the merger with the CME, we moved to a very electronic-focused marketplace, and so that really, in a pretty short amount of time, I really had the front row seat in seeing the market evolve, right? From traditional open outcry trading and a kind of a hybrid of that into where we are today, where at least in the U.S. markets and WTI and natural gas and even in Brent is much more electronically focused, and I think the end result of that, unfortunately, was the closing of the open outcry pits in New York and certainly even here in Chicago.
What is one attribute that you believe every trader should have?
I think I've always tried for myself anyway through my career to make sure that I was, could look myself in the mirror and say that I was, ethically correct and did the right thing, not only for the company that I worked for, but also for myself. Every day you have to look at yourself in the mirror and make sure that you had the utmost of ethics and made sure that you were, true to that. And I think that that's really something that all traders, or no matter what part of the marketplace you're in, should really kind of adhere to every day.
Favorite book about trading?
That's a good question. Again, going back to my NYMEX years, I met somebody there that was very influential and very colorful in the business. Mark Fisher, I'm sure you know Mark.
Yeah.
He wrote a book called The Logical Trader, and I think people. He ran a very big intern program every summer at the exchange, and he obviously made all the interns come in and read that book, and certainly either before or after or while they were there. And Mark had a really great, I think, philosophy on the marketplace and trading, and I think that's something that's even today, that book still has a lot of relevance for anybody that's involved in the markets.
Favorite movie about trading?
For me, that's an easy one. I'm not so sure for anybody else, but Trading Places was always my favorite movie about trading. I had the fortunate ability when I was at the NYMEX in probably the last 6 to 12 years I was there to kind of grow the intern program that we had at the NYMEX, and even through the CME years that I was there. And the one thing I made everybody watch when they first came in was watching Trading Places. Now, granted, there was a lot of comical relief from that, but the trading aspect of it, I thought, was very relevant, especially from an open outcry perspective. But even after open outcry shut down, I think that movie had a really big, still does, I think, has a really big relevance in the marketplace.
What's the best piece of advice that you've received about trading?
I think it's something that I give, and I also have received this, and I think it's just don't burn any bridges. I think it's important to cherish relationships, and again, it kind of goes back to the ethics part of your question earlier. I think that's all tied in to really make sure that when you develop a relationship, that you try to keep that relationship, close to your heart for the remainder of your career.
If you could go back in time and give the younger you a piece of advice, what would it be?
I think kind of related to that last question, cherish the relationships that you build. They're so valuable. You can work so hard to develop a new relationship in business, and it can go away so easily. And so those all kind of tie into being true to your heart. Look yourself in the mirror, make sure that you are true to yourself and true to the customers and the relationships that you build.
Last question for today. Favorite thing to do when you're not working?
I have a couple of them. I have a couple of favorites. Certainly having a maritime background. I grew up on boats. I went to the Maritime Academy, Merchant Marine Academy, and I think boating is probably still my favorite thing, but I still put a component of fishing in that, right? So I love to fish. I love to golf. I love to hunt. I think those things on the outside are probably my favorite combined things to do, and really, it's something that is a great way to relax.
Joe, where can people find you? I know you're active on LinkedIn, and give us a website to check out.
Yeah, sure. I'm very active on LinkedIn, Anthony. I have over 5,000 individual followers now. I think a lot of them since I joined R.J. O'Brien just a year ago. But certainly, I am active on LinkedIn. I post a lot of articles and pieces in the energy business about what's going on in the marketplace. And then my Twitter handle is @RaiaChat, and the website for R.J. O'Brien is rjobrien.com. So a lot of information on there about our markets, our technical analysis in the energy markets can be found on the website.
Joe, thank you so much for coming on Futures Radio Show today.
Thanks for having me, Anthony. It was really great to be here.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.